Bismillahirrahmanirrahim. This is the second video on the use of funds in governmental accounting. And in this video, we will solve exercises on general fund and enterprise fund, nature of governmental fund types and fund balances, effect of direct measurement focuses and basis of accounting, statement preparation for general fund, and finally an exercise on difference between expenditures and expenses. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is a K. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. So let us start with the first exercise on general fund. The general fund levied property taxes in the amount of 1 million for the calendar year 2009. It expects to collect 950,000 during the year, 30,000 in the first 60 days of the next year, and 15,000 during the rest of the next year. It does not expect to collect the remaining 5,000. So, how much property tax revenue should be recognized for the year 2009? So, to determine how much property tax revenue the general fund should recognize for the year 2009, we need to follow the revenue recognition principle under the modified accrual basis of accounting. Now, for governmental entities, property tax revenue is recognized in the period when it is both measurable and available. Available is generally defined as being collectible within 60 days after the end of the fiscal year. So let us break down the collection details. The total property tax levied is 100,000. During the year 2009, 950 is going to be collected. In the first 60 days of 2010, 30,000 will be collected, and during the rest of 2010, 15,000. 15,000. Now, this is not going to be recognized in 2009 as it is not available within 60 days. And then there is an uncollectible of 5,000, and this is not going to be recognized as a revenue as well. So, the revenue to be recognized for the year 2009 will be the amount collected during the year 2009, that is 950,000. Measurable and available in 2009, amount to be recognized within 60 days of 2010, that is 30,000. This amount is available and obviously it can be recognized as revenue in 2009. Then the amount to be recognized after 60 days of 2010, that is 15,000, and this is not available within 60 days, so it should not be recognized in 2009. Then there is an uncollectible amount of 5,000, and since it is uncollectible, it should not be recognized as revenue in 2009. So the total revenue recognized in 2009 is the revenue from 2009 collection, that is 950,000. Then revenue from collections within 60 days of 2010, that is 30,000. So the total property tax revenue recognized for 2009 is 980,000. So the general fund should recognize 980,000 as property tax revenue for the year 2009. Let us solve another exercise on general fund and enterprise fund. A governmental entity has a general fund and an enterprise fund. There are two funds. At the beginning of the year, neither fund has any unpaid salary liability. During the year, both funds paid salaries of 600,000. In addition, salaries for the last 3 days of the fiscal year, 15,000 for each fund, will be paid during the first week of the next fiscal year. How much should each fund report as salary expenditures or expenses for the fiscal year? So, to solve this, we need to consider the accounting treatment for both the general fund, which uses the modified accrual basis of accounting, and enterprise fund, which uses the accrual basis of accounting. Now, under the modified accrual basis, expenditures are recognized when they are measurable and available. For salary expenditures, the liability is recognized in the current year, and if the salaries are both earned and expected to be paid within the current fiscal year or within 60 days after the year end. So the salaries paid during the year is 600,000. These are to be recognized as expenditures in the current fiscal year, and the salaries for the last 3 days for the year, that is 15,000, are to be paid during the first week for the next fiscal year. And since these are expected to be paid within 60 days of the end of the fiscal year, they should also be recognized as expenditure for the current year. So the general fund should report 600,000 plus 15,000 in salary expenditures for the fiscal year. Now, under the accrual basis, expenses are recognized when incurred, regardless of when the cash is paid. This means that the salaries paid during the fiscal year should be recorded as expenses, whether or not they are paid during the year. So, the salaries paid during the year are once again under the enterprise funds. Salaries paid are 600,000 and they are recognized as expenses in the current fiscal year. Then the salaries for the last 3 days of the year is 15,000 and they are incurred during the current year, so they should also be recognized as an expense in the current fiscal year, even though they will be paid in the next fixed fiscal year. So the enterprise fund should report also 615,000 in salary expenses for the fiscal year, which includes the salaries paid during the year and the accrued salaries for the last 3 days. So the general fund will record 615 in salary expenditures, while enterprise fund will also record 615 in salary expense. Let us look into another exercise. A city has a general fund and an enterprise fund. During the year, legal claims are filed against the resources of both funds. City attorney believes that each claim will ultimately be settled for about 55,000, but settling claims of this kind usually is about a 3-year process. How much should be reported as a liability in each fund's balance sheet at the end of the current year? So, to determine how much should be reported as a liability for each fund at the end of the current year, we need to consider the accounting treatment for liabilities related to legal claims for both the general fund that uses the modified accrual basis and the enterprise fund that uses the accrual basis. Now, under the modified accrual basis of accounting, a liability is recognized only if it is both measurable and available. So, for legal claims, the liability should be recognized when it is likely to be settled and when it is measurable. Now, in this case, the city attorney believes that the claim will be settled for 55,000, but settling them will take about 3 years. Now, since the claims are not expected to be settled within the current fiscal year or within 60 days after the year end, they are not considered available for recognition in the general fund's balance sheet under modified accrual basis. So, under the general fund accounting rule, the city will not report a liability for the legal claims at the end of the current year because the claims will not be settled within the available period. Coming to enterprise funds, that uses accrual basis of accounting, a liability should be recognized when it is incurred, regardless of when the settlement occurs. Now, in this case, since the claim has been filed and the amount of each claim is measurable and likely to be settled for 55,000, the liability should be recognized for the entire amount. The enterprise fund will therefore recognize a liability of 55,000 for the claim, since the liability is measurable and certain to be incurred. Thus, the enterprise fund should report 55,000 for claim in the balance sheet. So, under the general fund, no liability will be reported for the legal claims at the end of the current year, since they are not expected to be settled within the available period. Under the enterprise funds, 55,000 of the liability will be reported for each legal claim, since the liability is incurred and measurable under the accrual basis of accounting. Let us look into another exercise. This is a comparative computation of expenditures and expenses based on the same underlying transactions. As you can see, a department of a local government began operation at the beginning of the current fiscal year with 250,000 cash. During the fiscal year, the department made cash disbursements for the following: salaries and other personal costs 100,000, office rent and utilities 24, retirement of debt 10,000, payment of interest 2,200, purchased equipment at the beginning of the fiscal year for 30,000. The equipment is expected to last 6 years and have a salvage value of 6,000. Photocopier rental is 10,500. So, based on the preceding transactions, compute total annual expenditure for this department, assuming it performs governmental type activities and is accounted for in the general fund. Then compute total annual expenses for this department, assuming it performs activities within an enterprise fund. Now, under general fund, it is expenditure, it is modified accrual basis of accounting. So we recognize expenditures when the liabilities are incurred, and typically we do not capitalize items like equipment, instead recording their purchase as an expenditure when cash is dispersed. So let us break down the expenditure for the general fund. We start with the first one, that is salaries and other personal cost, that is 100,000. Now this is a direct expenditure for personal cost, and that is 100,000. Then office rent and utilities expenditure is 24,000, and this is a cost incurred during the fiscal year and it has to be recorded as well. Then number 3, there is retirement of debt for 10,000, and this is considered an expenditure because it is a cash outflow related to the payment of principal, that is 10,000. Then there is payment of interest on debt of 2,200. They are also considered expenditure under the modified accrual basis. Then we have purchase of expenditure, purchase of equipment, and this equipment will be recorded as expenditure, that is 30,000. Since the general fund follows the modified accrual basis, the purchase of equipment will be recorded as an expenditure at the time of the cash disbursement, even though it will be depreciated over time for financial reporting purposes. Then we have a depreciation expense, and you can see depreciation. This will be obviously an expenditure. Also, 30,000 minus the salvage value of 6,000, that makes 24,000, and divided by the number of years 6, that makes 4,000 as such. Depreciation expense, but so we have we will talk about that in a minute. Then we have the photocopier rental, and the photocopier rental is 10,500. Now this is an operating expenditure and it has to be recorded. So when we make the total will be how much? This will be 176,000. 176,700. Now let's come to the enterprise funds, and under the accrual basis of accounting that applies to the enterprise fund, we recognize expenses when incurred, not when cash is disbursed. And we will capitalize the purchase of long term assets like equipment and depreciate them over time. So let us now compute the total annual expenses for the enterprise fund. So we have salaries and other personal costs. It will be the same, that is 10,000. Sorry, 100,000. Then we have the non salaries and other personal costs. These are the cost or expenses in the enterprise fund when they are incurred. Then we have office rent and utilities expense of 24,000. Now rent and utilities, these are operating expenses for the enterprise fund. Then we have the retirement of debt principal. Now principal retirement of debt principal is not an expense. The repayment of principal is not an expense. In an enterprise fund, it is a reduction in liabilities, so nothing is going to be recorded over here under the heading of expenses. But the payment of interest on debt is for 2,200, and interest is recognized as an expense when incurred. Now, next we have the purchase of equipment for 30,000. Now, this is not an expense under the accrual basis. So, the purchase of equipment is capitalized as an asset and depreciated over its useful life. Coming to the depreciation expense, it was not here definitely because the purchase of equipment was treated as an expenditure over here, and obviously this is not this here it is capitalized. Then we have when we talk about the depreciation, it is 30,000 minus 6,000 salvage value, that makes 24,000 divided by 6, that is equal to 4,000. So the depreciation expense will be recorded for 4,000. Then photocopier rental of 10,500. Now this is also an operating expense, and when we are going to make a total, the total will be 140,700. So that's how we compare the cost between the general fund expenditure and the enterprise fund expenses. Next, let us talk about another exercise. This is on the nature of governmental fund types and fund balances. So, table A. Now, J.J. Peasham is running for election as a commissioner of the municipality of Mount Lebanon. He examines table A in the text and calculates the total of the fund balances to be 10,282,000. Then, in a major campaign speech, he announces we have a surplus of more than 10 million, and if elected, I will use this entire slush fund to reduce your property taxes. Now, comment on Pisham's assertion based solely on your analysis of table A. We have the table A over here, and we have all the relevant information. Your understanding of the nature of governmental type and your general knowledge of governmental finance. So Peacham may not be able to, if you look over here, may not be able to accomplish everything he wants, but he could achieve part of it for some interesting reasons. Like if you look at the balances in the special revenue fund and the capital project funds are legally restricted, so they cannot be used for other purposes at all. So that goes away from our discussion. The debt service has a zero balance, so all is left is in the general funds. Now, if you look over here, the 760,000 that is labeled as non-spendable in the general fund, this represents long-term loans, meaning it is unavailable for property tax relief unless the loans are repaid. So he cannot use this money. Then 1,896,000 is already assigned to help balance the next fiscal year's budget, so it cannot be used for other purposes unless expenditures are reduced. Then we have 1,426,000. This amount, yes, this may be available if Peacham can persuade the other commissioners that the needs it is currently assigned to are less urgent than reducing property tax. It is possible. Now, the unassigned balance of 3,685,000 is available, but only if the other commissioners agree that reducing the cushion for potential future economic downturns or emergencies is acceptable. However, doing so could risk a downgrade in the entity's credit rating. Next, let us solve another exercise, and this is on effect of different measurement focus and the basis of accounting. Now, following are some of friendly village transactions during the current year 2013. For each transaction, state the amount the village would report as expenditures for the year 2013 if the transactions occurred in a governmental type fund, and the amount it would report at expense for the year if the transactions occurred in the enterprise funds. Okay. Now, first of all, we have we have friendly paid 600,000 in salaries during the year. In addition, during the last pay period, friendly employees earned 5,000 by December 31, but that amount was not paid until January 7. We will talk about that. So we have to break down each transaction, and we have to determine whether the expenditures are for the governmental type funds or expenses for enterprise funds for this friendly village for each of the three different scenarios. Now, in the transaction number 1, there is a salary payment that is friendly paid 600,000 in salaries during the year. Additionally, the employees earned 5,000 during the last pay period of 2013, but this amount was not paid until January 7, 2014. So let us break it into we have the government fund, and under the government fund, obviously we use the modified accrual basis of accounting. So expenditures are recognized when liabilities are incurred, and the liability is typically considered incurred when the salaries are has accrued, or when and not when they are paid as such. So friendly would report 600,000 for the salaries paid during 2013. In addition to this, the 5,000 that is earned by the employees during the last pay period but not paid until 2014. Okay, this can also be included because they are going to pay not paid until January 7. So we are, if we assume that they are going to pay within 2 months of the next fiscal year, it can be included also. And we are assuming that it is this can be paid within the 2 months. So the amount that can be paid will be 605,000 in this case. Then, if we for the number B for the enterprise fund expenses, if we take the same example, transaction number 1. So under the accrual basis of accounting, used that it is used for enterprise funds, expenses are recognized when incurred. So regardless of when the payment is made. So the friendly would report 600,000 for the salaries paid during the year 2013 plus 5,000 earned by the employees but not paid until January 7, because both amounts are considered to be incurred during the year 2013. So here also the amount is 605,000, and this will be recorded as an expense. Here it is recorded as an expenditure. Okay. In number 2, there is a purchase of sanitation truck. So friendly uses the proceeds of long-term bonds to buy a sanitation truck for 100,000. That was delivered and placed into service on July 1. So the truck has an estimated life of 10 years. So we are going to so under the governmental type, this is an expenditure, and under modified accrual accounting, purchase of capital assets are not capitalized, but instead they are recorded as expenditures when the asset is acquired. So since Friendly brought the sanitation truck in 2013, it will be reported as a expenditure of, and this is for the general fund. It will be 100,000 for transaction number 2. It will be recorded as 100,000 as an expenditure. Uh, so the expenditure is going to be 100,000. Coming to the enterprise funds, under accrual basis, capital assets are capitalized and depreciated over time. So Friendly, they are going to report 100,000 as an asset and not as a expense, first of all. But there will be a depreciation, and depreciation is going to be for, now depreciation is the value of the asset is 100, the life is 10 years, so the annual depreciation is 10,000. Now we have purchased in the month of on July 1, that means we have to charge depreciation from July to December, that is 6 months. So we are going to divide it by 2. So the depreciation for the year 2013 will be 5,000. So this will be the depreciation expense of 5,000. Then we go to the third one, that is payment of debt. Now Friendly, they have agreed to pay 100,000 used to buy the sanitation truck over the 5-year period starting December 31, 2013. Now on this date, they have paid 10,000 in principal and 3,000 in interest. Now, under modified accrual basis, that is for the governmental funds, for the general funds, sorry, for the general funds, we are going to use the modified accrual basis of accounting, and the expenditure for governmental type funds are recognized when the payment is made. Now, the 10,000 principal payment is recorded as an expenditure because it represents the current year cash outflow. The 3,000 interest payment is also recorded as an expenditure because it is a payment due in the current year. So the expenditure for the governmental type will be 10,000 plus 3,000, that is 13,000. 13,000, 1 3. And for the enterprise fund, obviously it's not expenditure, they are the expenses. And when we say expenses, so both principal and interest payments are treated differently in this case, because 10,000 principal payment is not an expense. It is a reduction in liabilities. It is not a reduction in expense, so it is not an expense since it is a repayment of debt. But the 3,000 interest payment is an expense because it is incurred, it is related to the debt. So we are going to record 3,000 as interest expense. So if we summarize the whole exercise, that we have number one, we have the general fund and we have the enterprise fund. So number one, when we talk about government type expenditure, we are going to record 600,000 as the salaries, and and there is a 5,000 additional to be paid by 7th of January. So both of them, so that comes out to be 605,000. And same is the case for the enterprise fund as well. This will be 605,000. Then we talk about the sanitation truck purchase. Now, in the case of governmental type, obviously this 100,000 purchase of truck will be recorded as expenditure, and in the case of enterprise funds, will be recording 5,000 as depreciation. Coming to the third one, we have the debt payment, and here we are paying the principal in and the interest both. For governmental type, it will be, we are going to add the principal of 10,000 plus 3,000, that makes 13,000. Both will be recorded as an expenditure. Under enterprise fund, we are going to record interest of 3,000 only, as the purchase of truck has to be capitalized, that is an asset under the accrual basis. Okay, let us look into another interesting exercise, and here we are going to talk about we are going to look into the effect of different measurement focus and basis of accounting, and let us see how we do that. Now, using the following data, prepare a statement of revenue and expenditure, and in fund balance, revenue and expenditure in fund balance for the general fund of Jasmine City for the year ended December 31, 2013. So we are here, we are interested only about the general fund, and don't forget, under general fund we follow the modified accrual basis of accounting. So to prepare the statement of revenue, expenditure, and changes in fund balance for the general fund of Jasmine City for the year December 31, 2013. 2013. So don't forget the basic format for the statement of revenue and expenditure. We record first the revenues, then we record the expenditures. Then there may be other financing sources uses. There may be changes in the fund balance, and so we start with the step number one. So we have the revenues first of all. So let us see all the possible revenues we have. We have the miscellaneous revenues, we have the licenses and permits, we have the, what else we have, we have the property taxes, and we have the state and federal grants. So we can simply substitute, copy down these values. Property tax is 7 million. Then we have licenses and permits for 1 million. Then we have state and federal grant for 2 million. And then finally we have miscellaneous 180,000. So the total revenue is 10,180,000. Then we are going to list all the expenditures for the general fund, and the expenditures, you can see we have the education program expenditures, we have the public safety expenditures, we have the park programs, and then we have the highway programs. So let us note down each one of them. We have the education, 2 million. Then we have parks, 750,000. Then we have public safety, 4 million. Then we have highways, 900,000. And the total is 7,650,000. So the difference, that is excess of revenue minus expenditure, will be 2,530,000. Okay. Then we look into the other financing sources, uses, and these includes transfer ins and transfer outs, and we can see that is transfer out, transfer out is 1,500,000, and the transfer from other funds is 700,000. So transfer ins is 700,000 and transfer outs are 1,500,000. So this is the when we solve, the total is going to be how much? The total will be negative 800,000. So the net change, we are going to solve the net change, and the net change will be 1,730,000. Now the fund balance at the beginning of the year is 1,500,000. We make the total, and the total will be 3,230,000. Okay. So if we summarize, you can see that the general fund for Jasmine City is 10,180,000 in revenues, 7,650,000 in the expenditures, a negative 800,000 in net transfers, and a change in the fund balance of 1,730,000. So the fund balance at the end of the year is 3,230,000. Let us look into one more exercise, and this is on difference between expenditures and expenses. Now, based on the information shown below, calculate for the year ended December 31, 2012, the total amount of expenditures that would be recognized when using the current financial resources measurement focus, and modified accrual basis of accounting, and the total amount of expenses that would be recognized using the economic resources measurement focus and accrual basis of accounting. So again, we are going to break down this information provided to calculate the expenditures under the current financial resources measurement focus and modified accrual basis of accounting, and the expenses under the economic resources measurement focus, and we will be following here the accrual basis of accounting. Now look at the first one. We have salaries paid during the year in cash is 3 million. Now if it is, this is an expenditure under the modified accrual basis. This is an expenditure, and this is going to be recognized when liabilities are incurred and are usually paid in the current period. Now, since the salaries were paid in 2012, the amount is recognized as an expenditure, and that is 3 million. Now, under the accrual basis, that is economic resources measurement focus, the expenses are recognized when incurred, regardless of when payment occurs. So, the 3 million So the 3 million in salaries is also recognized as an expense because the liability for the salaries were incurred in 2012. So coming to the second one, salaries applicable to 2012 due to be paid on January 5 is 2013 is 20,000. So expenditures under the modified accrual basis, obviously they are going to be recognized when the liability is incurred and is due and payable in the current year or within the 60 days of the next year. Now since these salaries will be paid in January 2013, they are going to be recognized as an expenditure in 2012. So that is, salaries are for 20,000. Under the accrual basis, expenses are recognized when incurred. So regardless of when the payment is made, so since the salaries were incurred in 2012, the amount is recognized as an expense for the year 2012. Coming to number 3, utility bill applicable due to be paid on January 10 to 2013 for 10,000. Now, expenditures once again under the modified accrual basis, expenditures are recognized when the liability is incurred and when payment is due within the current year, that is within 60 days of the next year. So, since the utility bill will be paid in January 2013, it is recognized as an expenditure in 2012. So, expenditure is 10,000. Then, under the accrual basis, expenses are recognized when incurred, regardless of when the payment is to be made. And since the utility bill was incurred in 2012, it is recognized as an expense in 2012, so it will be recorded as an expense. Then we go to equipment acquired or depreciation. Now, under the modified accrual basis, uh, capital outlays like equipment purchases, they are recognized as expenditures at the time the asset is acquired. Therefore, the purchase of equipment is recorded as an expenditure, and that is going to be 200,000. Now, under the accrual basis, capital purchase are not expensed in the year of acquisition. So, instead of the purchase is going to be capitalized as an asset and depreciation over its useful life. Now, since the equipment has a useful life of 10 years, the annual depreciation will be 200,000 divided by number of years. That gives us how much? That is going to be 20,000. Okay. Number 5, payment of principal on long-term debt on December 31, that is 100,000. Now, under the modified accrual basis, the payment of principal on long-term debt is considered as an expenditure when paid. So, expenditure is of 100,000. And under the accrual basis, the payment of principal on long-term debt are not considered expenses. They reduce the liability, but do not affect the income statement. So we are not going to record it over here as an expense. Then finally, we have the payment of interest on long-term debt on December 31. And that is amount is 40,000. So the under the modified accrual basis, the payment of interest is an expenditure because it represents the current year cash outflow. So the interest paid is 40,000. And under the accrual basis, the payment of interest is recognized as an expense in the period it is incurred, regardless of when it is paid. So the expense are of 50,000. So if we make the total, this will be 3,370,000, and this will be 3,090,000. So that's how we get the total expenditure and the total expenses. And this completes the second video on the use of funds in governmental accounting. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah, I will reply you back. Thank you so much and happy learning.